My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubeau. And have you ever wondered how you could start building wealth through real estate investing? Today, my guest is going to take a deep dive here. Abdul Kareem, a seasoned investor across 17 thriving markets. Well, thriving, we'll see. But get ready for the unlock the secrets to the real estate success. Abdul, welcome to the show. I think we're going to have a good time here.
Hey, thanks for having me, man. I should really appreciate it.
Yeah, thriving in today's economy can be short-lived, but before we dive into the 17 different markets, how did you get started? What spurred the idea to say, hey, maybe real estate investing is something I can make some money on?
Yeah, for sure, man. So it all really started back in the beginning of 2021. I was scrolling on TikTok and I seen this guy. His name was King Kong. I don't know if you guys know him, but he's like a wholesaling guru.
Okay.
And then at first, like I never heard about real estate before that, and I was like, damn, you found a house, distressed house, and then you flip the paper. You don't even have to buy the house, and you can make 10, 20K. That's like wholesaling. I was like, at first I thought it was a scam, right? But when I looked into it more and more, and I seen people doing it, it actually works. I was like, okay, this thing works. I might as well try it. So that's how it all really started. And just, from there, just watched a lot of YouTube videos. I didn't have money for courses, so I just watched, YouTube University. A lot of videos, like days, like months, watching videos. And now it's like a lot of time watching videos and taking action, obviously, because action without knowledge is useless. It's like half useless because, you
You
got to
could
do
put
something with
yourself
the
out there.
knowledge.
Yeah.
That's the thing. You know, and surprisingly, a lot of the people, like 90% of the people, they don't take action. I don't know why. If they're scared, they don't want to leave their comfort zone. But a lot of people, they need to know, like, discomfort is where successful people come out from. Like, for example, even like going to the gym. It's like you don't like going to the gym, but you have to go to the gym to build the body you want. So the same concept, really. Yeah.
Yeah, you got to do something. So is that where you kind of cut your teeth on the wholesaling side? Um, how long did you do that before you ended up in the fix and flip game?
Yeah, so to be honest, I did that for like a year and a half, and to be honest, I know there's a lot of obviously good like wholesalers that, excuse me, make very good money from it, but now looking back at it, I obviously wasn't doing it the right way. I mean, the best way I could to maximize profit, but I know I could have done better. But now I look at fix and flip is so much easier, so much easier. You don't really have to, way less work than finding deals, to be honest. And it's really the mindset shift that was like, okay, so why are people not buying deals? Why are they wholesaling them? And then I realized, is raising capital. That's what it all, like real estate, like the main thing you need is raising capital.
Yeah.
You want your money to work for you, you gotta have money. You know what I mean? So that's really, I would say, and that's really the main thing that attracted me to this podcast is because all you guys talk a lot about capital raising and stuff like that, and that's what really attracted me to you guys, and that's really what I want to scale in my business. Really, is capital raising.
Yeah. I mean, and the other thing too is like you can definitely get started in real estate and do some stuff in real estate and, start getting going. But eventually you run out of your own money. And usually, I was on a podcast the other day and we were talking about it and I said, people have money. You could start with like $1 million, but chances are your dreams are always going to outpace the capital that you have. Like,
Oh, yeah.
and then if you can learn to raise money effectively, you can pretty much dream whatever, and people will, if it's investable, they'll invest in it. So, um,
Yeah, yeah, I definitely say like even if you have $1 million, don't start with that. Start
yeah,
with start with raising money and put that $1 million in something else that's gonna give you way more money, way more return, ROI on your money than turning them into deals here and here where you can, because not really, if you think about it, money is kind of cheap right now. Like it's cheap to get money. If you want to, if you can spend 12-15% annually getting like money, might as well do that and put your money somewhere else where you can get 50-100% return. You know what I mean?
yeah.
So,
Well, and I always say too is like, if you have some amount of money, let's say you've got like 30 or 50 grand or something, that's probably better spent on your education
mhm,
than on a house because
yeah.
the education is going to pay itself over and over and over again. And people aren't really lining up to like pay for your education in real estate, but they will line up to pay for a property if you found something interesting. So, what led you to expand into these 17 different markets?
I mean, really from the start, like I know, like I live in Minneapolis, like St. Paul area, Minnesota.
Yeah,
I know it's not a really good market, like for flipping, or I know there's like better markets. I shouldn't say it's not a good
yeah.
market. Like I know there's better markets where I could find like spend more time there and find way better deals than looking at my market and not finding as many of good deals, and I know I have wasted progress pretty much. So like I'm looking, I mean those 17 markets, I didn't just pick them out of nowhere.
Hmm.
Those are proven markets by big companies that I even work with that already invest in these markets, and there is growth in these markets. Like those markets, all of those markets is one of the best markets in the country, and there's going to be more added and added. But even now, I have wholesalers that send me deals that is not in my market. I mean, it's very rare; it doesn't happen often. But let's say it's not in my market, but as long as it's a good deal, and there's like comps like backing it up, and obviously it's a good deal, then
Hmm.
then you just do it. Even if it's not in your market. Like
I
numbers
think
don't
one of
lie.
the I think one of the big things is Um, I think a lot of people like that idea, but they're really worried about managing the operations. So, how do you manage the operations across all these different markets?
Yeah, it's it's really easy to be. I mean, it sounds like complex and complicated, and that's how I thought of it at first. It's like, how do these people do it? And
Hmm.
they don't even see the house. They don't do this, and I realized like teamwork makes the dream work. You gotta find people in those like states that, like for example, like for a fix and flip. What do you need for a fix and flip? You need a
Well, one good
contractor,
contractor, yeah, a realtor.
you need a realtor, and to make the deal work, you need a hard money lender, a private money lender.
Hmm.
So obviously for agents, I look up in the market the top real estate agents in that market, and I reach out to the top 10, for example, and I know whoever responds to me the fastest, that's the person I want to work with. You know,
Yeah,
like if I reach out to, okay, I want to work with you on future deals, and whoever responds the fastest, that's the person that wants to work. They have the heart, like, they're not on vacations all the time, they're not answering their phones. You don't want to
yeah.
work with those people.
You're testing them a bit.
You're testing it. That's like the test. So you reach out to the top 10, right? For example, real estate agents, like top real estate agents.
Yeah,
And trust me, those, like, working with those people will change your life, because you're working with like one of the top percent, and they say the 5 people you hang around with is who you become. So when you hang around with the top people, top 1%, you're gonna be in the top 1%. Mentally, you see how they act, and they influence your actions. So that's how I find people. And GCs, obviously they're a little bit harder. That's why you got to go on like Facebook groups and Google
hmm,
Maps. Find GCs, and you have to network. You gotta network to find GCs because GCs, to be honest, in my opinion, is like the hardest. Not the hardest, but you have to find. It's hard to find the right ones. There's some that might rip you off. Some might, you pay them and they just don't show up to work. So
Yeah.
you gotta vet them before you work with them.
The other
You know?
thing too is that if you work with them for a long time, I found that, sometimes their business grows out
Yeah,
of whatever they're doing. You got to find a new one. So you're like, darn it, I can't afford you anymore. The prices keep going up and good for you,
yeah,
but I got to find a new guy because it's just not, you don't fit the box anymore. So,
yeah.
um,
It's funny you say that, and it happens, but is very rare. It's like because most of the, to be honest, what I realized from working with contractors is that when you prove to them that you're easy to work with, they want to work
mhm,
with you even more, to be honest.
mhm,
But when you work with them and they seem like you're a little bit hard to work with, they don't want to work with you anymore. So you gotta be easy with them and don't treat them like they're just workers. Treat them like they're
mhm,
part of your team because that's what they are.
mhm,
So yeah, to be honest, all the GCs I'm working with right now, they all want to yeah, hey, that's and I realize why a lot of people don't talk about their GCs to other people because okay, like you said, it's like, oh, he's gonna get more job and he's gonna leave me. And
mhm,
but that's not true all the time, because like an average GC, they can handle up to 6 projects at the same time.
mhm.
I mean, projects last a couple months. I mean, they're not going anywhere. So you just got to be respectful to them, and that's really the main thing. Yeah.
So, raising capital is often cited as a major challenge in real estate. So, how have you navigated this part of the business and, what sort of advice do you have for people who are just getting started?
If you're just getting started, definitely reach out to your friends and family, like your phone contacts. I mean, a lot of people don't understand, but like you probably have someone on your phone right now that has money that you can reach out to, and as long as you got a good deal, you can pitch them and convince them, to invest in it. There's probably somebody in your phone right now.
Mm-hmm.
So
Mm-hmm.
so you got to look at that first, and after that, you got to obviously network. Facebook, you got to reach out to people that are doing the thing, especially like private money lender, private money lending. The best way that a lot of people don't tell you how to find private money, but the most obvious way is public records. Like you can go public records and boom, private money. I mean, there's a way to do it. You can probably look it up on YouTube, but you can find private money lenders on public records
Mm-hmm.
and
Find out who
or
gave them the loan, right?
yeah, that, and also network, like you gotta, there's people that they're called connectors, especially
Mm-hmm.
like sub two community, like we have connectors, they partner, they have a lot of private money lenders and stuff,
Mm-hmm.
and they get a fee, be like, okay, I'm gonna connect you to this private money lender to do your deal, let me just get a 5K fee out of it, whatever. And
Mm-hmm.
you just do that, and that's the easy way. You can pay to get your lenders, and that's why you got a network, so you don't have to pay. But
Mm-hmm.
yeah,
Well, when you're getting started, typically, you pay for
network.
some connections, but then, you can network your way through it, especially if you don't have a whole lot of capital. Now, with using private money,
Uh,
super important to maintain relationships. So what is it that you do to keep those people happy and, keep them interested in working with you in the future?
yeah, for sure. Like for example, I have this one private money lender guy. He gave me like almost $100,000 on a flip, and and obviously there's a couple things, right? There is always a few things that you gotta get right. First is when you pitch yourself on the deal, you have to seem confident. You have to have that confidence. Like you have to know what you're doing, kind of. Like if you know what you're doing, you're gonna have confidence. But if you don't know what you're doing and you're not actually doing the thing, you're not gonna have confidence. It's just as simple as that, and confidence comes from taking action.
Mm-hmm.
And yeah, so first you gotta have confidence, and secondly, you gotta be more lenient. Like for example, let's say he gave me 100,000, and let's say I told him I'll give you 15% on your investment in annually, right?
Mm-hmm. Mm-hmm.
But let's say let's say I finished the fix and flip, let's say I finished renovating it and I sold it within 6 months, you know, I'm gonna give him his money back within 6 months with the full 15% interest. I'm not gonna be like, oh, I gave you 15% interest annually, so I'm gonna cut that in half and you're only gonna get 7.5%.
Mm-hmm.
So you don't want to be like that. You want to be more lenient because when you give them the full 15% faster, and they want to work with you even more. Oh, this guy is, he's awesome. He's great.
Mm-hmm.
That's how you get them. You just gotta like, what's the word? What's the word?
Kind of
You gotta,
greasing the wheels a little bit, and making
yeah, you
sure
gotta
that
put the carrot. Put the
yeah, carrot on the stick. So, um, what strategies do you employ to identify lucrative investment opportunities in these markets that you operate in? So, how do you find the deals?
good question. Always goes back to networking. They say your network is your net worth. If you don't have a
Hmm.
network, you don't have a net worth. So
Hmm.
so first networking with wholesalers. There's a lot of wholesalers out there. That's really our, like, when me and my partner, when we were buying property, like we never really do like outbound or inbound. We just wholesalers. There's online on market deals, there's off market deals, wholesalers, agents, a lot of them have like off market deals, deals they haven't even listed on the MLS or on the market. Yeah, you just got a network, really. It's all about network. There's a lot of Facebook groups. You just look up wholesaling,
Hmm.
whatever you want on Facebook groups, and you'll find those Facebook groups, and you just go in those Facebook groups. Just keep looking at deals. Go look in the past last week. Go in the last couple days on every Facebook group. You'll find deals. There's no doubt about it. You just gotta put in the work. Look at deals and community. I have a community. That's why sometimes you just invest in yourself, and so you have all the resources. Like in the sub two page, to be honest, there's a free say Facebook page for sub two, and there's a paid one, a private one. And both of them have amazing deals. You just go
Hmm.
look and you find deals. Yeah, it's simple.
So, when you're looking at these different projects, yeah, we get the comps and all that, but do you find it challenging to stay on top of 17 different markets and what's going on with the market itself?
To be honest, no. I mean, no and yes. Because it's hard to explain. Like this is like the thing about fix and flippers and entrepreneurs, right? When we look for deals, like we gotta see if it's a good deal first, and we'll go from there. Because
Hmm.
we're looking at like a lot of deals. Like we
Hmm.
can't be specific at every deal we look at. Look in the market first. No, no, no. We have to look at the deal first, and if it makes sense, okay, what are we gonna do to get like what things are we willing to let go that we usually wouldn't let go because this is a good deal. So you just got to look at those factors. And what was your question again? I forget.
Well, like for instance, of 17 markets, things happen in a market sometimes in 6 months or maybe even less that kind of change the buying attitude for the people that are buying these fix and flips, right?
Oh
So
yeah,
at the end of
oh
the
yeah.
day, you got to get rid of this thing, you got to sell it to a homeowner, and then suddenly, I don't know, Amazon decides they're shutting their thing down and people aren't so excited about buying houses. So how do you keep tabs on these markets that you're investing in, being that you have so many going on?
Yeah, so really, like I said, we have a lot of markets. It's not because like we're doing like a deal in every market in the same month. No, it's like we have a lot of markets because we know we're gonna have more opportunities to look at. That's the first thing. And second thing, But remind me, the question was what? Sorry. Say that
Well,
again.
it's like for instance, I'm always tracking like days on market and absorption rate because like one thing about flipping is that if
Hmm,
you get to the end of the game and you're having a hard time exiting, even though we
hmm,
you know we bought it in this winter and we're going to sell it in the spring, or like why isn't it moving yet? What's going
hmm,
on? So
hmm.
how do you keep
Okay.
track of
Yep. I'll tell you. I'll
those
tell you.
different markets? Yeah.
So the way we look at deals, what we have first when we're looking at a deal in the first place, we gotta make sure we buy it right. We gotta buy it at a really good discount that even if we're in the like worst case scenario, we're gonna make money, you know?
Mhm.
So you gotta like that's kind of like in the beginning underwriting. You gotta like
Right.
underwrite deal good, and that's what we're good at. Like me and my partner, we're like the best, underwriters in the I'm not bragging, but I'm just saying like the last hard money lender guy we worked on, he was like he never seen a good underwriter in the last year because we
Hmm.
came exactly at the appraisal value, and usually people come above, under. We came exactly, and it happened. We do it consistently, so we're super good. But to answer your question, yeah, so look at deals super conservatively, and also, when you look at deals, make sure there's at least three comps that sold within the same subdivision in the last 3 months. Like it has to be pretty, specific to your property, and make sure it's not too old. Obviously, you got to do all that comping. But as long as you have activity going on there within the last 3 months, you're gonna sell your house. I mean, it's just, you gotta look at the obviously like how many houses sold in that market within. But yeah, you just do your due diligence. You
So
know,
if you're not finding that due diligence, you just don't do the deal.
yeah, you don't do the deal. Yep. Go to
And
the.
that's and
There's a
that's
lot
why
of
you're
deals.
like that's
That's
why you're
why
in all these different markets, because it's like if it's not looking like a deal, well, I'll just do a deal in whatever,
exactly,
you know,
exactly. Yeah,
New
yeah.
Orleans or something else.
Yeah. And that's really the mindset you have to have because, like otherwise you're not gonna do a lot of deals, because especially you're not the only buyer in that market, you gotta like, especially like good deals, like if you probably know this, but really good deals, they don't last very long. Like you have to
No,
be
you got to
active,
move.
like right away. Like sometimes like good deals literally they list them the same day. I reach out to them the next day. Oh, this deal is done. It's gone.
Yeah, it's gone.
It's like you have to like you have to find people that because some people like some wholesalers like they don't even want to work with you because they have so many buyers.
Yeah.
So you have to like find other wholesalers that have really good deals and don't have a lot of buyers, so you can have even you can even negotiate because sometimes like most deals you'll have to negotiate, and those
So
people that have a lot of buyers, they're not going to want to negotiate. Like, oh, well, but you're sending me trashy deals, and they get mad.
so what are some lessons you've learned through this kind of real estate journey that you're on here that have kind of influenced your current strategy?
Yeah, I mean, uh, in what way? What way are you like?
Well, you know, sometimes you don't make as much as you thought you might. You know, you go in there and maybe it doesn't go as smoothly, or, you know, like sometimes it doesn't always turn out. So have they all been successful flips so far, or have you learned a lesson or two along the way?
Yeah, I mean, so far they have definitely been successful, but I'm pretty sure like, the more you keep doing, you might. But that's the thing about me and my partner. Like we look like we're so knowledgeable that we try to avoid all the risk or minimize all the risk there is. Like excuse me, like I'm 24 years old, right? And like I can take some risk, but my partner, surprisingly, he's like in his 50s and he doesn't want to
Hmm.
take any risk, and I rely on him a lot because he helps me sometimes be like, even sometimes when I get emotional about a deal, he's like, don't get emotional, it's like this is all numbers.
That's how you're going to lose money for sure.
Yeah, because if you're emotional, you're gonna lose money. So you have to look at the numbers. You have to make sure this deal like makes sense. And to be honest, like I never did this and I don't think I will, but let's say somebody that don't know what they're doing, they don't look at the deal right, and let's say they're thinking they're gonna lose money on the deal. What they can
Hmm.
do is just back out and let the hard money lender take over the deal, because that's really their job. You know, like let's say you didn't know what you're doing and you have a hard money lender that's giving you the loan. And the main reason hard money lenders are in business because they are relying on people to fail so they can take over the good deal without them having to find it. That's the whole
Mm.
reason of a hard money lender. So you're doing them a favor if you don't know what you're doing. That's literally what you're doing. So there's really no risk. There's really, I mean, there is some risk, yeah, but you just have to minimize that risk. You know what I mean? You have to look at it from a different perspective. You know what I mean?
Yeah,
So
instead of just losing the money and messing it up,
yeah, and to be
just call
honest,
them
like
up and say, hey,
yeah,
I'm over my head. You just take this thing back
yeah, yeah. I mean, that's like worst case scenario, you know. And what was I gonna say?
sooner rather
Uh,
than later, though. You don't want that interest to like stack up.
yeah,
Don't
yeah,
don't
yeah.
wait too long to exit the deal. I've stuck
Oh yeah,
around in deals way too long where I should have just cut my losses instead of losing 20K or something over time, just lose a couple grand and move on with your life. Sometimes. And that's the thing when you do deals in just one market. So I work in one market. And if the market's not great here, well, that's my whole business. So you look at yours and you say, okay, well, if the market's not great, we're just not doing business in that market. Just do business in another market. So
yeah. And
how do you
to be
go ahead?
honest, yeah, I was gonna say like doing deals in different markets. To be honest, I think it's way easier than doing in one market because it's not just that you have more opportunities, is that you don't really have a limit of how many deals you can do. You know, like for example, the reason I have a partner is definitely like having a partner, like even though it's gonna cut your like winnings by a little bit, it's gonna be so much easier, like and fun to go on the journey. Like for example, like when I'm looking at deals, like I'm having fun. I'm looking at them with my friend, my partner, like yeah, it's like and he like for example, like anything like he doesn't make me do much work really. Like any information we have to send to the title company, like all that work, like we're dividing it and it's awesome when you have a partner. It's like so much less work, so much less headache, so much more fun. Is just worth it. And sometimes they'll catch you when you're emotional on a deal. They'll tell you, hey, don't get emotional. And that's and you learn lessons, Yeah.
So is all of the capital you're using hard money loans, or do you have private investors that you're also using because not
Yeah,
in
we,
not
we do
all
both.
cases, yeah. So tell me about the private money lenders, the ones that you deal with directly, and how do you report back to them when things are going good and when things are going not so good? What's that process like for people who are invested with you?
Yeah, yeah. So to answer your first question, we use both hard money and private money at the same time. Like for
Hmm.
example, like on a deal, and it depends. Sometimes it could be all hard money, sometimes it could be all private money, but that's very rare.
Hmm.
But to answer your question, how I respond to them, and I mean to be honest, that's why I say in the beginning, like you have to minimize your risk. Like if you think you're gonna put like a private money lender at risk, don't ask them for money because you're gonna get hurt in the end. So first thing you gotta underwrite your deals good, make sure you don't do any mistakes in that aspect. And I mean, to be honest, I haven't had any problems with my private money lenders so far. They all love me and so I haven't experienced the bad side yet. But to be honest, like most of my private money lenders, a lot of them don't want to be bothered. Like, that like I give them updates, right? I'd be like, okay, we listed the house on the market, we finished, and oh, awesome, awesome, and they love the process. But they know when they first signed the contract that they're giving me a loan for 6, 12 months, whatever, at this interest rate. So at that time, you're gonna get your money back, and we're gonna sell the house before then, and you're gonna get your money back. And that's how it's been so far. I mean, we definitely give them updates, and sometimes if we're in that market, if we fly over, we'll go on lunch. Well, I mean, it's like you have to build a relationship, and
Hmm.
we definitely go back and forth, texting, if they are friendly, because a lot of them, they don't really care about you. They want to give you money, give their money. It's just business,
Yeah, they
so
want you to go to work the money, and let me know when it's ready to pick
yeah,
up.
yeah, yeah, yeah.
So looking ahead, what are your goals for the future for your real estate portfolio?
Yeah, so for sure, we definitely gonna keep doing more fix and flips, because you need today money. You need today money. So
Hmm. Hmm.
definitely more fix and flips, and we're looking to get into multifamily pretty soon. We just need to. It's all. It takes time. You can't just jump into stuff. You gotta have the knowledge. You have to have the people. Yeah, so definitely multifamily. Yeah, yeah, definitely. Yeah, fix and flip and multifamily. That's what I can think of right now. Yeah.
Are you going to be holding them or fixing and flipping multifamily?
No, definitely hold in multifamily for cash flow
Yeah,
and fix and flip for today money,
yeah,
now.
income.
Yeah.
So yeah, that awesome, man. So if people want to connect with you, they want to find out more, what should they do? How do they find you?
Yeah, so if you need if you have deals, you can always hit me up on my email. Pretty sure it's on the screen, or you can
Hmm.
hit me up on Instagram. It's ITSABDUL.K on Instagram. I reply to all my messages. If you want to partner with me on private money lending deals, we always have that going. Reach out to me if you have any questions. I'm willing to help if you have any questions. Yeah, I'm always here, not going anywhere.
Awesome, awesome. Well, I really appreciate you stopping by.
Yeah, of course, man. Thank you. I appreciate you for having me.
Yeah,
Let's
no problem. Until next time, guys, we'll catch you on the next episode.
peace.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.